Hello, welcome traders. It is Thursday, April 25th, 2024. Kind of an up and down day in the market for the most part. We'll jump into the charts a bit as we go, but the markets opened down at the beginning of the day, uh, sold off pretty decently, all based on that Meta news and bad earnings from Caterpillar, IBM. So all of those stocks selling off pushed the markets down hard. And then during the rest of the day, it just started to slowly recover and move back up. Let's take a quick look at what the markets look like, and then we'll get into our account and show you what we did on the session today. And then after the bell tonight, got earnings from Mr. Softy, Microsoft, and Google tonight. So let's take a look at those. And right now, looks pretty good for those to be pushing things up. So let's take a look at the markets and see how things are shaking out. And I'll get myself off the screen so that you can see what's going on here. But overall, a pretty good day in the markets. Here we go on SPY. You can see, opened gap down on the session today, moved down hard, opened up way down here about almost 499 and change, and then throughout the day, dropped a little bit more early on, with some of the GDP and other numbers that came out, and then just slowly edged up towards the end of the day. Still ended down fractionally on the day, a 0.5% down on the SPX or the SPY. But on the daily chart here, if we're looking at the daily, you're still in a bullish PSAR pattern, and that didn't even come close to getting tested today. We're also looking at MACD reversing higher. You've got RSI that's been moving higher, dropped a bit today. I'm going to drop the 50 mark in here. I don't know how all of my charts got messed up, but Schwab's certainly given us a run for our money, trying to convert everything over. Had a lot of issues. And squeeze reversing here as well. So even though you're in a bearish trend, okay, we've got some, underlying bullish types of signs. Was today going to be just another, 2-day pop, reversal candle, and down we go? That still could happen. Or we might be able to get a little bit more of a pop tomorrow based upon Google and Microsoft maybe trying to come in and save the day. However, you're still in a current downtrend on the weekly and the daily, and nothing has changed yet, okay, here. And we're still at, lower lows, lower highs, okay, here as we move down, lower low, lower high, lower low, lower high. So we will have to beat, probably this area up in here uh, to see if we can set a new higher high here. And maybe even the candle from yesterday, we'll definitely have to get above that and break back above the 21. So who knows where we go? Right now, we just trade what we see, and what we see is a bit of a bearish line, but held our own today and some good earnings after the bell. Quick look at the Qs as well here. Lots of stuff going on this particular chart. So looking at the Qs, still in a bearish trend. This thing dropped down, rebounded a bit this week, and then again gapped down today, even though we finished off the lows. This is still not as constructive as the S&P looks. So we'll see if we can break this downtrend line maybe in the next day or two, or do we just continue to go down? IWM also dropped on the session today. Pretty solid gap down, finished well off, nice hammer candle. It's not at the bottom of anything here, but again, you've seen the bears push it down, and they've had a hard time keeping it down here. So we'll keep watching this one, but again, we can put together a bit of a downtrend line that we'll be watching. Certainly, we have not made a decisive move either direction. I mean, tomorrow's going to be really, really important to see where we finish the day tomorrow going into the weekend. Do we get back above? It's really not going to change anything Tomorrow, most likely we're going to have to wait until probably Monday or Tuesday to get any kind of a definitive change in direction. But overall, still bearish on IWM for now. But maybe some lower resistance or support areas have been held. And if I bring this previous uh, support resistance level over, we do it on some of the other on the futures. We haven't really done it here. Okay, this is the line in the sand. Okay, this is the previous resistance level. It flipped, became support, got broken here. So now do we come up? We didn't quite tag it, but we got doggone close on Tuesday before failing. The question is if the Russell's going to do anything, it's going to have to get back above the 200 line. Simply put, things look better, things look improved. We'll see what happens. We did not see much of an improvement at all. VIX actually dropped on the session down to 15 and change. The dollar dropped on the session. All right, so on ES, pretty much the same thing. Nice finish off the lows of the day. It's up in after hours trading right now. So you can see it's moving up on the Google and Microsoft earnings. So I've already covered that pretty well. On oil here, this uptrend still continues and looks like we've managed to base out and starting to maybe pick our momentum back up. MACD and RSI starting to really regain some positive momentum. I like where we are on oil. We're going to stick with our plan on oil. Right now, we've got some naked puts. Those are up 34% in 24 days. We've got a strangle from 2 days ago, up almost 10%. We've got a 112. We got a call side 112. It's up 62%. Standard 112 up 60%. We've got another 112 up 86%. And then we have some put debit spreads left over. So overall, we've got some great trades in oil, and I love where oil is sitting right now. So let's give it a little bit of a chance here, but I think oil is giving you a good opportunity here for a strangle. But I think also a 112 trade would work. So oil, I'm going to continue to get into oil. Now, bonds, this is the one that bit us a little bit today. Took a little tiny loss on one of the trades. Spec trade I had on oil today. But here's the interesting part. And all that was a put credit spread that I entered off of this hammer candle here and this hammer candle back here. And we maintained sideways until the last 2 days. GDP came out pretty weak today, so the economy not doing great, and unemployment came out really good today. Not enough people losing their jobs, unfortunately, for the markets, which means interest rates popped up a little bit more today, and that's hurting bonds right now. So the fact that the Fed isn't going to make any moves anytime soon because there's really no reason to. Unemployment, okay, is not rising. Okay, the Fed needs unemployment to start increasing. Okay, they need inflation to come down. Well, we're not getting either one of those as fast as the Fed needs to. So really, there's no. I think you got to look out to September right now for a potential rate cut. So in the meantime, we're seeing rates slowly inching their way up. If we look at the 10-year here, you can see the 10-year is just inching up and up and up to 4.7% now, almost back to our highs of last year. Do I think we're going to beat and stay above 5%? I really don't think so. Okay? I think we could still move up potentially a little bit more, but I think we're really starting to get a little bit extended on these rates. And I'm still going to put the number around 5. I really don't see a significant move above 5%, which would mean on bonds, I don't see a significant low beyond 107. I think this low should hold 105 or so at the most. So I'm okay trying to track down in here with bonds. We keep opening low, finishing off our lows, opening low, finishing off the lows, opening low, finishing off the lows, opening low, finishing off the lows, opening down, finishing off, The mornings have been weak, and then bonds have can always improved throughout the day. I really thought about not stopping out and just waiting a little bit for the day, but I'm sticking to my trade plan. So my rules are my rules. If I have a 2x loss, even though I think we close off the lows of the day, because that's been the pattern on bonds almost every day, I just stuck to my trade plan. Got to set the example. Okay, trade your plan, follow your trade. Follow your trade plan. So we're going to set the example, do the right thing, and stop out. It was only a 0.5% loss because I sized my spec trade to 0.5% of my net lick. So really not much of a loss on the session today. We did close out an oil strangle today as well for a 50% winner. So this is all still all good. We are bearish, no doubt about it. I've not said we are bullish. What I've said is I'm bullish. Okay. I'm bullish long term on bonds. Okay. This pullback is, in my opinion, giving us one of the greatest entry points that you're going to see for years on an asset. Okay. I'm probably a little early, although I'm sticking to a lot of my trades. We've taken a couple losses in bonds, but we've also got some trades that are winning nicely in bonds. And we've got a PDS and a 112 that's up 215% right now. We're sitting on a strangle, two strangles, which are both just down fractionally. We've got a naked put, which I'm going to continue to add, which is way below here at 103. Okay, that's basically a break-even trade. Okay, we've been in that for 13 days, and we're only down $90 in that trade. And then we've got a 112 trade, which is up 76%. So overall, we're still in good shape on bonds. Yes, the chart is bearish. I am bullish longer term. I think the more we come down here, we might be getting in a little too early, but I'm really watching what's going on. MACD has been improving. Okay. Squeeze momentum has been improving on the daily. So the daily chart shows us running out of steam. And if you look at today's low and look at RSI compared to the previous low, okay, it's not quite as low. So there's a little bit of a divergence here. Okay. RSI is not setting new lows while ZB is. And doesn't mean that we're not early, that we shouldn't jump into it. Still a bearish mode. Still think you need to be cautious, but I'm trading out 60, 90 days, 120 days here on bonds. And the fact that I'm bullish longer term on bonds, I still think down here at 107 gives us a break. So anyway, that's what I'm looking at. Now, I did talk about gold to the members today that I thought this move down on gold, like nice hammer candle forming in here. This move down on gold, I think, is giving you an opportunity to get into gold. I'm still very bullish gold this year. I think this pullback to the 21 and holding it and then bouncing off today, I like it. I think this is a good opportunity on gold to get yourself back into some trades. And so I like gold where we are. Similar on copper, you would think, but no go. Copper is completely different right now. Copper is just up, up, up in a way. It's where gold was weeks ago, where this thing is not really giving you too many entry points. This entry point here was probably a good opportunity. I would like to see something closer to the 21 on it. You can't always get what you want, but again, you're overbought on copper. I need a little bit more of a pullback, so it's really a no-go trade for me. And then if we look at the NASDAQ, which we did cover the Qs earlier on, you're still in a downtrend overall, especially on the weekly. We're a downtrend on the daily. Today, really good price action. Okay, bullish engulfing candle today, which is really a big, important thing to note. Bullish engulfing, bullish PSAR, rising MACD, RSI, and squeeze. You got some momentum coming back in here, and that's going to play out with the Google and Amazon news pushing things. And I want to skip down here to the Aussie dollar and take a quick look at that. This is in a really nice position here. I think this is a perfect strangle opportunity. You've got a bearish trend, but holding right around the 21. RSI square in the middle here. RSI still pretty much in the middle. You're at the 21 EMA. I think 6A or the Aussie dollar is giving you a strangle opportunity. This is probably where I think I want to get in. All right, so I want to really take a look at the Aussie dollar. So I think this is probably one of my favorite plays right now. I don't love ES, even though I think you could start to potentially put some trades in. I like oil. I like gold for a 112, right? And I like 6A right now. And I'm going to continue to just stick to the basics of putting strangles on, taking strangles off, holding my 112 trades, and I'm probably going to just start to keep it there for a while. I am heading on vacation in 2 weeks, and I really don't want to be looking at all at my portfolio. So I want to make it easy and probably let some trades come off and not replace some others, except for some of these strangle and other opportunities. I don't want to have a ton of different things to manage as I go out because I really don't want to spend any time while I'm on vacation. All right, let's take a quick look at some of the charts today. So Apple, okay, continues to show a nice rebound here back to the 21 EMA on the daily. So a nice bounce off support. Apple not looking too shabby here. And then in after hours right now on Apple, we've got, yeah, maybe it's up fractionally, but it's pretty much break even in after hours. Microsoft, huge gap down today. So Microsoft taking a gigantic gap down on the Meta news, okay, very bearish, okay, super bearish. And we already broke the uh, ascending wedge, which was my pattern that I love to watch. That already told you that we had a bearish break. Hopefully you played that opportunity if you were trading stocks or if you're in the active trader service. You had a good opportunity here to get short or play the call credit spreads. Okay. Momentum's been down. However, in the after hours, this thing is popping up about 17 points to about 417, which is going to put us back up here just above the 21 EMA should we open at these levels tomorrow. So right now we're going to look to open around 417. That should trigger a bullish PSAR signal, put us back above the 21. But overall, I don't know that this is the time to get long after this big bounce back up in here. Maybe we keep running. Who knows? We'll see on that. Amazon, it's popping a little bit after hours, but only up to about 179, right back to the 21 EMA. That would still continue this downtrend. Earnings are coming out soon. In fact, earnings on Amazon are on the 30th next week. All right, Meta, huge gap down. Okay, so now we got a gap here. We're trying to fill this previous gap, which we did a pretty good job of trying to fill the whole gap today. But this thing's also popping up a little bit in after hours here. So maybe this is a little bit overdone. I don't know. You got to give it the 3-day rule. We'll wait till next week to make some kind of ruling there. Google, gap down, finished near the highs of the day. And Google is going to have a monstrous day tomorrow. Right now, indicated way up over 178. I can't even barely get it on the screen, but you're looking at up here in the nosebleeds, way overbought tomorrow. So Google, scarily going to pop to overbought. So if you got shorted today, that was probably not a great move. All right, here, NVIDIA, it's been bearish, moving down. However, this thing's going to pop a little bit tomorrow. Still getting, right now, the 21-day moving average is what we're going to keep an eye on. Tesla, big gap up after earnings, and then a nice move up today, looking maybe fractionally higher in the after hours trading. Good look down here, I think, to put on a potentially bullish trade in Tesla. I think if you're doing something along the lines of leaps or 120-day out trades, I think Tesla may set up okay for you. There, Costco, pretty much unchanged on the session today. Didn't gap down like everything else with the Meta earnings, which it really shouldn't. But I think you're going to see this thing continue to just hang in here a bit. We had a dividend here, so a dividend came out today on this move, and then hopefully we'll see this thing just continue to stay sideways. We have a trade in the active trader service on Costco. So we've got a Costco trade. It's our second Costco trade. The first one was a winner. This one's pretty much flat right now after a couple days. Let's run through some of the other trades in the active trader service. We're sitting here in Adobe. Right? So Adobe in a bearish trend, but I loved the oversold action with MACD rising, the RSI trying to get itself going. Okay, I want to get these lines in here. Really frustrating that I lost all of this on toss, but it's okay. Everything's been rising. MACD, RSI, squeeze has been rising on the daily, really holding this level here. So this Adobe trade for us is doing pretty well, still hanging in there after a couple of weeks of trade where it really hasn't done much of anything. But I do like the trade that we're in. And tomorrow this thing looks to have maybe a little bit more of a bounce in its step. But today, even though it went down, it handled the day pretty decently on Adobe. We're also sitting here in Coin. So let's skip on down to Coin and see what we see and see what we saw when we placed this trade. So this Coin, while it's in a bit of a bearish downtrend overall, I don't even know what this is in here. Let's get rid of some of these lines that don't really make a whole lot of sense anymore for anything. So Coin here just hanging in there a bit. MACD has been trying to reverse higher. Squeeze has been trying to reverse higher. And then RSI is just pretty much hanging right in the middle, not doing a whole lot of anything. But we have a put credit spread working on cost. And this one's actually doing pretty well. It's only down 30 bucks, I think, right now since we put this trade on. So overall, I like where we are here. We could see this thing start to pop a little bit more tomorrow as it's really holding this 50, and we're getting closer and closer to this downtrend line. And then the last one we have working in here is Home Depot. So let's take a quick look at Home Depot, so see where we are on Home Depot. Now, Home Depot did drop on the session today. So we've been holding in here. We started to see this improvement a couple days ago. So we hopped in on this bit of an improvement here, and then Home Depot tailed off the last 2 days against us. But overall, it's not down terribly. So it's still well above. We sold a put credit spread, so we have plenty of room all the way down to 320 down here. I like the hammer candle we got today, finishing off the lows. If this thing can get a little bit of a reversal in it here, get back above the 200-day, which I thought would hold. Maybe it's just a 1 day below. We'll see if we can get back above that. Anyway, those are some of our trades. We've got some other trades cooking, ready to go on. We have loved a good handful of trades out there. I think Lulu had a nice run. This little pullback might be giving you a chance if you missed the run on Lulu. I think that's not bad. I liked Schwab, even though I'm really upset with what they've done with Thinkorswim. Okay, I love the way this Schwab looks here. I think we missed a little bit of this breakout, but if we get any kind of a pullback in here, I would want to get long on Schwab. McDonald's has had a nice reversal today, a little bit of a pullback, and it's been, it's had a good run here. Let's see if it consolidates a bit before it can move higher. I do like where UNH is. Nice bounce here, moving higher. Really constructive looking chart. So there's a lot of different stocks out there. And then, of course, we have our trades on Boeing. It triggered a bearish signal today, but really, MACD has been improving. RSI is oversold. I think today might signal somewhat of a bit of a bottom after yesterday's earnings. Now, the earnings yesterday were better than expected. Okay, it popped, it dropped, and then today it rebounded a bit after a little bit of early on in the session. So anyway, there's some stocks for you if that's your thing, and if you like those, come check out the Active Trader service. We are 3-0 this month on stock trades, and right now we've got 4 more working. Have had no losses there, and then we've been nailing 0 DTE trades in there as well. We are at on 0 DTE, I believe we're at a 94.1% win rate. All right, where do we finish today on the main account? Delta 471 on the day, as a little bit of a down day in the market, but zero point 0.1 well below, very Delta neutral. Theta dropped a bit more as VIX is dropping, volatility is dropping, 1265, which is 0.27, still fine there. Netlink dropped a fraction today, a couple grand. BP usage also dropped significantly today, which is now we're now down to a 44%. I did not put any trades on today. I want to see what Microsoft and Google did. I'm keeping the powder dry. If they rebound the market significantly tomorrow, I probably still won't put anything on in ES, but I will probably start to put some other trades on. I'm going to be looking at trades in gold. I'm going to be looking at trades in oil, and I'm going to be looking at trades in bonds. So those 3 will be my 3 areas. I'll probably add from one of those areas tomorrow. Overall, we're still sitting up at almost 13% in realized gains, and we're sitting up at a little over 11% in net lick for the year. We still have several days to go in this month, and if we get a big pop tomorrow, we only closed one of our long-term 112 trades this month. We've got another one that's sitting here and basically at 90%. It's likely I will close that trade before month end just to get some other things on. We've got a couple other trades that are working here that'll be coming off as well. And we're sitting on a Leap that's basically done nothing right now. It's totally fine, hasn't hurt us. But that Leap is sitting out there. We'll see if we continue to move sideways or keep bouncing around here. That'll play out. But we've got some hedges coming off in a few days. So we've got a hedge coming off in 5 days. So we'll see how that goes. Other than that, we're in really pretty good shape on our trades. And I equated the trade today in bonds. So let's just take a quick look at the losers and the winners from today. So today we did close out. We got stopped out for $2,000, but that is $2,000 on a $474,000 account. Okay, is a 0.4% loss. So really 0.4%. So if you're sizing your spec trades properly, it's not really going to damage your account at all. So a little bit of a loss there, but that was offset by a nice strangle win here on oil. So strangle win on oil closed it at 50% winner, 13% return on margin. That puts our strangles for the year. Went over this with our members today. We have 22 winners, 24 total trades. So we're 22 out of 24, which is 92%. We have a 92% win rate. We took a loss on gold when it spiked. We took a loss on copper when it spiked. Everything else has been perfect. But one thing you see that's missing is ES. I think it's almost time to start getting back into ES. We've had 6 winning straight trades on oil. I mean, that has been just a consistent winner. We have 6 winning trades on gold, 4 on copper, 4 on bonds, and 2 on other futures out there. So right now, I mean, you can't beat it. Our methodology is working in a volatile market environment. We're at 92%. So don't tell me your strangles aren't working. Okay, if they are, you're not following the right methodologies out there. If you're following what I'm doing, we're giving you a chance to win on strangle. So most likely we'll add to our realized P&L. We'll close out of a long-term 112 trade here probably any day, maybe tomorrow. We'll see going into the weekend. We've got plenty of buying power ready to go. If the market turns and goes south, we're in good shape. If it goes up, we have a chance to get in on some things. We're very delta neutral. The plan's working absolutely perfectly. We are right there at almost 12% after 4 months. That's 3% a month, including taking the hedges out. Okay. The hedges were supposed to, just subtract a little bit from that. Okay. Hedges are all good. It's all good. Okay. Even hedging the way we are, we're still hitting our 3% a month, and we've got plenty of buying power out there to weather any storm. We were never in any trouble the other day on it when last week when things moved up and other people were getting their accounts in a little bit of trouble. We did not, because we're diversified well, okay, and we're sticking to the plan. We don't have a lot of strangles and crazy stuff that didn't make sense. And you don't see me putting on 3 or 4 strangles at the same time in the same underlying. We are spreading things out. Anyway, that's the plan. Okay? Follow your plan. Keep your buying power low. Okay? Trade often with consistent strategies that will give you a positive expectancy over time. And just let the plan come to you. And a couple other things. I stopped out. I didn't stop out. I closed out of that oil strangle today because I had a GTC order to close at 50%. And others didn't close. Now, some of it was because they didn't have the same setup. Some people went wider, okay, which means they're further away from the money, which means those are going to decay slower. You have less theta, it's going to decay slower. It's just going to take you more time to win. It's okay, nothing wrong with that. Okay, but the farther away from the money you get, the slower things are going to decay. But again, I'm not trading 45 DTE. Okay, the tasty trade method typically was 45 DTE, 1 standard deviation. Okay, that's not for me. That is not how I manage. Rolling the untested side up, going inverted if you need to, rolling out in time, all of it. I don't do any of that stuff. None of it. Okay, because I'm sticking to the probabilities, okay, of closing winning trades that I put together over years and years and years. Okay, my methodology has worked out pretty well, and you're sitting at a 92% win rate this year in a volatile year where the market's going like this, and then it's going down, and now it's up, volatility spiking, crazy stuff's happening in gold, oil, you got the Middle East, and we're still able to just consistently put on trades that win. Okay, and the key here is have a plan, follow your plan. Okay? You can try to deviate from it, okay, and try some different things out. But if you're going to do that, make it a spec trade and trade small. And for the love of Pete, watch who you're following out there. Are you following people that have the same account size, the same trading style as you, and the same risk tolerance as you? Or are you just following, this guy's doing well, I'm just going to grab a trade he's doing. Hey, this guy's over here and he's scalping and he's doing well, and let's go follow him. Okay, this guy's doing this over here. Let's go do what he's doing. Oh, somebody in the Discord is selling these types of strategies. I think I'll tweak it and do my own. Who are you following? What are you watching? Okay. Follow the people that trade the same style as you, the same account size as you, and have the same risk tolerance as you. Otherwise, don't give up your principles that are the core of your mindset, the core of your being, your why. Why would you compromise those so that you can try to emulate somebody else? Okay. Find the trades that work. We teach that in our small group training. We'll give you 20 different strategies to pick and choose from. There's hundreds out there. Okay. Why would you follow some guy on some channel somewhere doing something that doesn't align with your why, your goals, your risk tolerance? Stop it. Put a plan together. Don't make another trade until you have a written plan. All right. Have a great rest of your evening. We'll see how the markets do tomorrow. Right now, after hours, things are up, looking a little bit more positive than yesterday at the end of the bell. Okay, so maybe it was all just a one-day sell-off and it's all over. Or is it just a little pop in a downtrend, okay, a little counter-trend rally that is doomed to fail yet again? Either way, we're set up for it. Hope you are too. Take care. Bye-bye.